so that there won't be interruption. Secondly, we don't expect the session to go beyond 90 minutes. So to manage this timing, as the presentation is ongoing, would crave your indulgence to please drop your questions in the chat box. And I would like to share the profile of our speaker. Dr. ABIODUN ADEDIPE is the founder and chief consultant of ADEDIPE Associates Limited. With over 4 decades of postgraduate work and professional experience that cuts across university teaching, investment banking, project finance, and financial consulting, as well as leadership in business and not-for-profit organizations. ABIODUN has had an illustrious career that took him through the University of Lagos, Enterprise Consulting Group, the World Bank, International Merchant Bank PLC, and First City Monument Bank PLC. He received his doctorate degree in industrial economics, specializing in corporate finance from the University of Lagos in 1989, and BSc in economics first class from the University of Ife, now Obafemi Awolowo University, OAU, in 1980. And he has bagged several awards in the process, including Sir Adam Thompson Scholarship as visiting doctoral students to the University of Sussex, UK, 1984. He is a member of several respected professional bodies, including the Institute of Directors, Nigeria, Chartered Institute of Bankers of Nigeria, the Nigeria Economic Society, and the American Economic Association. ABIODUN's technical expertise is wide-ranging, covering corporate strategy, research, and economic analysis, solving complex business problems, and assisting clients to execute business solutions in line with their corporate strategies. He sits on the boards of some profit-seeking and not-for-profit organizations, and is actively involved in director development at the Institute of Directors, Nigeria. He has served in various capacities in government, including member of the Presidential Committee of Experts on the Redomination of Naira, November 2008, member of the Federal Government Committee of Experts on Expenditure Review, October 2010 to March 2011, and Senior Special Assistant to the President, Financial Sector Development in the Office of the Chief Economic Advisor, 2011. ABIODUN founded BAA Consult in February 1993, and he has been responsible for charting and managing the firm's strategy and activities since operations commenced in March 1994. Dr. ABIODUN ADEDIPE, good morning. Dr. ABIODUN ADEDIPE, good morning.
I can hear you now.
Oh, Dr. ADEDIPE, good morning. It's a pleasure to have you here today.
Yeah, thank you. Same here. Can you hear me?
Yes, sir. The floor is open to you, sir. Thank you.
Thank you. All right. Good morning, ladies and gentlemen. It's my pleasure to be here this morning to talk about the economic outlook of Nigeria on the platform of Apel. And I want to say a very big thank you to Apel for having me do this today. I will share my slides and then share my perspective on what we expect this year and how we got to where we are and what companies, especially clients of Apel, should do in order to take advantage of the opportunities and also navigate the challenges in that environment. So I will run through this outline, which is first is the premise, and then we'll look at global macroeconomic and social issues. Then we come back to the Nigerian economy, our own context, in terms of business and in terms of extracting value out of the issues around us, then do an outlook. What do we expect really in terms of major, macroeconomic issues and what the implications are for business? And finally end with what your own organization should be doing at a time like this, right? So the premise, I call them fundamentals, are basically two in perspective. The first is to understand that the Nigerian business environment has very many challenges, and we all know this very well. We talk about them all the time. And in fact, it appears that oftentimes many of us spend more time discussing, analyzing the challenges rather than taking time to also view and identify what the opportunities are and how we can take advantage of them. But my view is very simple. What we see and what we focus on is indeed our choice, which means it is not something anybody imposes on us, it's a choice. So if I choose to focus more on opportunities rather than challenges, then I will gravitate more towards those opportunities. But if I focus more on the challenges rather than the opportunities, then most likely I develop an inertia and of course will not be able to accomplish much within that environment. Now, when we make choices also, according to Ken Levin, those choices at the end of the day also make us, which means the choices we make today in this conversation will determine how we respond to them and what may likely be the output or outcome of those decisions and choices. Three things go together here. There are choices, there are decisions, and there are actions, all in context of developing strategy for your organization and then achieving your strategic objectives. So what are the issues that will be in your, what I call the business lexicon for 2023? These are issues that none of us can escape unless we don't do business in Nigeria. The first is coming from the perspective of global disruptions, which I put in 5 different crucibles here. The first is the Ukraine war, which of course we all know very well, started as Russian invasion of Ukraine. We then turned it to Russian-Ukrainian war. Then we later turned it to Russian war on Ukraine. Now we refer to it as Ukraine war. But as at this morning, there is an issue of how the West will support Ukraine in order to restart their, advances against Russia on the one hand. But even within the West, there's a big challenge between Germany and the rest of them. Germany says, look, our kind of tank that is called Leopard tank is German, that ordinarily, that's what they expect Germany to also provide. But Germany says, no, we are not giving our Leopard tanks. And so the challenge there is that while the West is saying we support Ukraine, the US has just done that, but not all of the West is together in what kind of, military hardware they should provide. Then the pandemic has become an issue again. Yes, began 2019 December, 2020 became a pandemic, as in the real sense of it, a global health crisis. And by the time we got to end of 2021 and then enter 2022, we began to envisage that end of 2022, beginning 2023 that we are now, there's a likelihood that the world will return to normal, in which case social intensive activities will no longer require us to either mask up or maintain social distance. But here again, there's a resurgence of COVID-19 in China and is spreading to other countries around the world. So that is bringing fresh disruptions to not only economic activities, but in particular business operations. The macroeconomic volatility, talking about interest rates, inflation rates, and of course, all manner of macroeconomic issues that have concerns not only at the national level and sub-national in different countries, but globally, especially when you look at the expectation this year that many countries will likely go into recession. This will be the fact that also on the back of that, there is, you now pick specific countries and begin to talk about, is there a likelihood that we go into recession in Nigeria? Is there a likelihood that a number of African countries will go into that? So that becomes an issue for conversation. There's also societal divisiveness. where now you find a lot of differences that are taken to such levels, causing social unrest. Look, for example, at Peru today. There is crisis in Peru. Brazil is just getting through one. Yesterday in France, there was protests all over the country because retirement age is proposed to be moved from 62 to 64 years. So all over the world. In UK, their own cases is like there's an evolving super union in UK, where every workers' union is coming together and saying that, listen, inflation rates have been very high. Cost of living has skyrocketed. So wages should be increased. So these challenges are all over the world and so affecting economic activities. Then there's geopolitical tension. The one relating to the Ukrainian-Russian war, the one relating to China that is proposed or projected to invade Taiwan, and several others. All of these are, of course, affecting business this year. Then the two items at the extreme, uncertainty and complexity, threats from competitors, problems in the supply chain, and of course, opportunities amid challenges. And of course, you also are in your own organization. You face pressure from stakeholders, employees that want improved pay, some also wanting to work remotely, customers demanding more value from you, and of course, shareholders demanding also for handsome return on their investments. Then the boards of directors who are ultimately responsible for the company's performance. So all of these are challenges that we're all facing. But in the midst of this all, we have to also face some issues that are global in nature. What I've done in this slide is to give you an idea of what happened in the global economy 2021, 2022, the estimated GDP growth rates across selected regions and countries. And then, of course, what is expected this year as a forecast, and what is the forecast like for next year, 2024. Now, I put Nigeria's zone in red so that we can see clearly what is expected from us. We grew 3.6 in 2021 as per World Bank Global Economic Prospects published last week. 2022 estimated at 3.1, and they expect us to drop to 2.9% in 2023, that is this year, and maintain the same next year. So, but how does this play out? And we go to this slide now and show you a kind of high points of social and economic issues and their implications globally. Okay. First, in the Russian-Ukrainian war. When Russia invaded Ukraine February last year, many Western countries introduced sanctions on Russia. Those sanctions, of course, drove up global energy prices, brought disruptions to supply chains, especially of major commodities, and then they followed the rising cost of doing business globally. Of course, in Nigeria here, we also know how it impacted us. Maybe initially we thought the impact will not be much, but by the time you wake up in the morning and you ask for breakfast and you make a preference for bread, once you choose bread, obviously you find the prices much higher than what you had expected. And then they tell you that there's a war going on somewhere in Europe, and that is what is affecting your life here in Nigeria. That's the way it is all over the world. Then, of course, shifting economic growth to energy exporting countries, which means the price of crude oil and other hydrocarbons went up significantly. And so those countries that export made a lot more earnings from the sale of hydrocarbons. When we say hydrocarbons, that means reference to crude oil, condensate, and associated gas. All right. So now, ordinarily, that is the group Nigeria belongs to. We should have made money from that. But unfortunately, we're not producing anything near our OPEC quota or near our capacity. And so, and of course, likely because of oil theft. Anyway, so that made us unable to take advantage of that development on the global oil market, in the global oil market. And of course, for the countries that import energy, they also had to pay a lot more. In fact, growth there had to also slow down. Unfortunately, we are at good ends. Because we export crude oil, we import refined petroleum products. So that is where it began to hurt us. So we therefore suffered at the two ends of this particular issue. Increased global energy prices triggered inflationary pressures. The Chinese economy, second largest in the world, also slowed down because of the policy on zero COVID, and of course, real estate sector, which is a major driver of the Chinese economy, that also became weak because of bad loans and the rest of it. So, but this, of course, the Chinese government addressed because they realized that if they did not do something before end of 2022, the Chinese economy began to suffer badly in 2023. So they revised the zero COVID policy on the one hand, so opened all the regions they had locked down. Secondly, they mandated the banks to restructure all the loans they gave to the real estate sector so that the sector can revive and begin to do business afresh. Solving their conundrum is simply to say that, look, all over the world, countries are owing and their governments are owing a lot of money. So it's not peculiar to Nigeria, but you find that if you take the figure globally, the global sovereign debt is more than 3 times the global GDP. And that means at the global level, borrowing is a problem. And in many countries also, domestically, is also a problem. All right? Stagflation, for those who are not economists here, stagflation means inflation is high, but growth is slow. So it's a combination of 2 words, stagnation and inflation. So we economists call it stagflation. It has become a reality now. But as at this time last year, we're projecting that it will likely happen. And why did we say that? You remember I showed you earlier in this slide that the global economy grew strongly in 2021. After COVID-19 of 2020, most governments introduced fiscal stimulus. That is, they borrowed variously from anywhere they could find it to stimulate economic activities. Central banks also reduced their lending rates and introduced a lot of unorthodox policies, okay, in order to put more money into the economy. So the combination of those two brought a lot of injection into the economy. And so most economies grew very strongly in 2021. And then we said, once those policies became reversed, that is, governments no longer pump a lot of money to the economy, central banks also begin now to raise interest rates in order to fight inflation. We may see economic growth. What we get is slow growth, but inflation is still high up there. But beyond that also, this year, 2023, the IMF issued a report that says 1/3 of countries this year will experience recession, okay? Now, that is on the one hand. Then the other side to it is that we countries are likely to enter recession. Then they picked out US as one of those countries, and that becomes a big issue for you and I and everyone around the world, because US economy is the largest in the world. And being the largest, if it goes into recession, it means it will have ratchet effects, on the rest of us. So that became something to worry about. Also in 2022, the US dollar became very strong. In fact, it got to a level historically, when you compare US dollar to the pound sterling, that they came at par, a situation that they had seen for well over 3 decades ago. So, but not only that, the strong US dollar caused currency crisis in many countries, including Nigeria. And not all economies could take advantage of their currency becoming weaker. Because ordinarily, if your currency is weaker, it should mean you'll be able to export more. But if you don't have capacity to export, then a weak currency will serve no good. All right? British exporters, for example, fell in that category in 2022. There are changing workplace dynamics. And of course, redefined employee expectations and wages structuring. Property prices are already falling in at least 9 rich countries. I've thought about global debt, so I'll move beyond that. Then African Continental Free Trade Agreement has potential market of $3 trillion. And of course, the projection is that that can lift intra-regional trade to 20% for Africa. But that, of course, is so little compared to 60% in Asia or 70% in the European Union. But it's a good start anyway for Nigeria. Now, coming to this year, the World Bank issued what they call the Global Economic Prospects. It's a report issued every year, January of every year. So the one issued for this year was released last week, and this is the summary of the World Bank about what has happened and what we may likely expect this year. Asset prices have been in broad synchronous decline. Investment growth has weakened substantially. Housing markets in many countries are worsening rapidly. Shock waves continue to emanate from the Russian Federation's invasion of Ukraine, especially in energy and other commodity markets. You recollect, I mentioned this earlier, okay? The World Bank now says, against this backdrop, confidence has fallen precipitously. It is the fall in confidence that also informed the projection of IMF that the global economy will go into, 1/3 of the economies in the world will go into recession this year. Now, the world's three major engines of growth, United States, the Euro area, and China, are undergoing a period of pronounced weakness, and that is bringing adverse spillovers for emerging markets and developing economies. Nigeria is among the EMDEs, okay? And many of these are already struggling with weakening domestic conditions. There's a slide where I summarize the weakening domestic conditions for Nigeria that I will show you later. So now, let's come back home. Having seen what is happening globally, which is still evolving as we speak, okay, just as an aside. Oftentimes people talk, that, oh, the Nigerian government has borrowed too much. We have borrowed too much. And I just smile, because the question really, when you talk about borrowing, is about what did you do with the money? And I'll give an example. Just yesterday, in Bangkok, in Thailand, a railway terminal was commissioned. And that terminal costs the Thailand government some $9 billion. That's a terminal, not rail line, terminal, okay? $9 billion. But what can it do? It has 24 platforms and can handle 600,000 passengers in a day. It took them almost 10 years to build, okay? And of course, it was not money they brought out of the pocket. They also borrowed money to do that. So that is just an aside. So now let's come home to our own economy, because that's where we operate. And that's what we want to dimension so that we can fully understand the issues and how we position our own businesses, okay? Now, as I said earlier, our economy contracted in 2020 by 1.92. That was the second recession in the last, 7 years. It recovered in 2021 to 3.4%. That's the data from National Bureau of Statistics. The World Bank estimated our growth to be 3.6%. Okay. Now, market dynamics caused by Ukrainian war recently reversed Chinese zero COVID policy, and recession prospects for a third of world economies tempered the oil market. With Nigeria's body light trading, I checked the price yesterday. That's what I have here. As at 9:19 p.m. yesterday, Nigeria's premium crude body light was selling for $87.78 per barrel. And that's quite good, especially when you look at that vis-a-vis the budget benchmark for this year. All right. So, but again, the budget benchmark, don't forget, is an average for the year. This one is spot. This was what I saw at that point in time. If I go to check this money, the price will be different. So that's also to point out to you that when people criticize the assumption in the budget of federal government, is because they don't take into account what it means to put an assumption. The assumption is an average figure for the entire year. So I can, for example, now start dancing. Nigeria is going to really enjoy this because the price is $87.7 per barrel. This is a spot rate. It doesn't give me any point as to what the average for the year will be. Okay? But one important thing from this slide is this particular chart. What this chart shows you is how our economy has grown or contracted in the last 10 years. That's from January 2013 up on the September 2022 latest official data available. You can see clearly there in that picture, 2 occasions our economy went into recession. and then how we came out of recession very fast in 2020, but we came out of it slowly and painfully, in 2017, because coming out of recession in 2017 did not happen until we got to the third and fourth quarter. But in 2020, it didn't take us long. We dipped in 1-2 moves and we're out of it. So, but the key issue is this: what caused the recession of 2016? The oil market. What caused the recession of 2020? The COVID-19 pandemic. So, what we need to understand the reasons for the dampening, and then what we did to get out of it. Okay. So now, going beyond this, I also like to point out, and this is important for you in terms of planning for your business this year, and that is comparing our GDP growth rate with our population growth rate. If you look in the earlier part of the chart, from first quarter of 2013 up until first quarter of 2015, our GDP grew faster than our population. Then, in the second quarter of 2015, that is before Buhari came into office, our GDP grew slower than our population. And then the third quarter, the very first quarter Buhari came into office, GDP grew faster than population. But after that, GDP went on the way. You can see it when it turned negative recession in 2016. Population was up there, still growing, steady. The economy was slow. We recovered and we're just, managing to grow, but less than the growth rate of our population. Then the game changed in the second quarter of 2021, when our GDP grew strongly on the back of recovery from COVID-19, following massive fiscal injection by the federal government and also accommodative monetary policy by the central bank. So we again grew strongly and began to grow again faster than our population. But the last data available, third quarter of 2022, we observed there that again, our growth rate was slow, 2.25%, so lower than the growth rate of our population. But I will say something about the dynamics of the population. One is that July last year, Nigeria became the 6th most populated country in the world. But not only that, this population we talk about is also a consuming one, because the marginal propensity to consume in Nigeria is very high. That means the regular Nigeria spends rather than save and invest. So which means you have a situation where the population also represents market. And what we also say is that we should disregard all this reference to Nigeria being the poverty capital of the world. It's a myth. In fact, it's been proven to be a fallacy. And as we speak now, at the World Economic Forum holding in Davos, one of the 5 thematic areas to be interrogated is the claim of poverty. That in fact, basing poverty definition on income is, an aberration. And that's the argument I've made in the last 5 to 6 years. In 2018, when Brookings Institution issued that document that said 80% of Nigerians are poor, I challenged it. I said, look, I want to know where you carried out a survey. How many people did you survey? And where are those people that made you arrive at 80% of our population living below the poverty line? And I also said this, which is what is now being discussed globally by world and business leaders in Davos as we speak. And that is the African culture is such that people don't live in only what they earn. They live on what they earn and what economics call transfers. Transfers is when I say, for example, I call Ikimi, is my friend. Say, look, I'm short of cash. Can I get some 5,000 naira from you? And Ikimi gives me 5,000 naira. He says, it's a dash, it's not a loan. Okay? That is the communal life we live in Africa. So, and I said, if you want to judge my well-being economically or what I earn as income, then you would have gotten it completely wrong, because life in Africa is never like that. Okay? Interestingly, it has taken between then and now for world leaders and business leaders to accept that they have politicized poverty, let me call it a labeling Not only that, there's also a study done by McKinsey. McKinsey is a respected consulting firm. And in that study, they said, if we want to look at poverty, let's look beyond countries. Instead of saying a particular country, oh, there's a lot of poverty in India, there's poverty in Nigeria, there's poverty in this and that, oh, in this country, so-called advanced countries, there's no poverty. That is a wrong approach, to dealing with poverty. That in fact, you can break the entire world into 40,000 communities. And if you talk about communities, they exist in large numbers across different countries. So if you look at Nigeria, for example, many communities in here, some extremely poor, some extremely affluent. In which case, if you simply label Nigeria as a poor country, you are disregarding the pockets of affluence within that country. Same thing goes in the US, UK, Germany, and so on and so forth. They said in that report. So the issue now is that if you look at that population in Nigeria that consumes, it means there's a market for what you are selling. I created this particular pie chart about 10 years ago to illustrate and also demystify the common refrain that our economy is not diversified. When you look at this, what it tells you is there are 19 sectors of the economy summarized there. There are actually 43 that the National Bureau of Statistics divided the economy into. So those 43 are now aggregated into the 19 you see in this chart. So every quarter, the National Bureau of Statistics carries out a survey and collates the data to measure the level of our gross domestic product. And so when you look at the value created in each of these 19 sectors, you can then say this sector represents this percentage of our GDP. Now, you can see clearly here, later data available, third quarter of 2022, that agriculture topped the bill, contributing 29.7%, followed, of course, by trade, 15.3, ICT, 15.3, then manufacturing, 8.6, then, of course, mining and quarrying, 5.9, real estate, 5.6. Interestingly, under mining and quarrying is where oil is. And that very quarter, that is third quarter of last year, oil accounted for about 5.6 something percent of our GDP, meaning that oil contributed less to GDP, but ironically accounts for the bulk of our foreign earnings. That's what my top bullet point here shows. If you take an average from January to September last year, oil in our foreign trade accounted for 79.1%, whereas GDP, it accounted for average of 6.21%. So that is where the real problem of the economy is. We are vulnerable in our external sector, which means we depend on hydrocarbons for most of our foreign earnings. So that is where the problem is. If you cannot produce oil and you cannot import oil, definitely the economy will suffer with respect to foreign earnings. And if you now switch that to the other side, what do you import? You import practically everything, both oil products and non-oil products. And of course, there's one, okay, this is the slide. I wanted to talk to you, but I didn't know it's the next slide. Now, this slide shows you that on the average every month, especially going with the data for 2022, we imported 1.9 trillion worth of commodities every month in Nigeria. So if you import that much, and you cannot generate that much from exporting to other countries, then you will have challenges with the exchange value of your currency. So that is where the pressure is coming from on the Naira when it comes to Naira-dollar exchange rate or Naira compared to any of our major trading currencies. Again, if you look at the external reserves, and I also like to put this forward so that on your own, you can also do this kind of check. Where do you get data for external reserves? Go to the website of Central Bank of Nigeria. Okay, we see there external reserves. External reserves fall in two categories: the liquid portion and then the block portion. You take that liquid portion, get the figure. If you look at the last day of 2022, the figure of the liquid portion of our external reserves was $36.048 billion US. Put that on one side. Now, what I gave are the trade data on the table to the right here came from National Bureau of Statistics. Again, go to their website. Every quarter, once they collect the data, MBS will publish the trade data for Nigeria. You look at the trade data, what the value of imports, what's the value of exports. It even breaks it down into oil and non-oil. But if you take what we imported, we get this value. So all I did was to take exchange rate, the official, and use it to divide this monthly import bill for 2022. So I got $4.363 billion per month that we spend on imports, $4.36 billion. Take that $4.36 billion, use it to divide the liquid external reserves of $36.048 billion. It will give you 8.26 months. That means if Nigeria is unable to produce and sell anything to the rest of the world, we have enough money in the pocket to pay for our imports at the rate we imported between January and September last year for a period of 8.26 months. That's what it means. So the question now is, what does this imply? If this number of months is less than 3 months, then we are in crisis. We say we are in serious currency crisis. If it is less than 6 months, okay, greater than 3, we say we are in a challenging situation. We need to do something urgently. But anytime you have greater than 6 months, going by what IMF, recommends, because they deal more with exchange issues and stability, macroeconomic stability. So now what they tell you is that if you have greater than 6 months, there's no reason to worry about the exchange value of your currency. You should be able to stabilize it. Okay. So the question for us is, if it is greater, then why should we be expecting that Naira will lose value? That's on the one hand. The other side to it is our terms of trade. I put that in this yellow box here. Okay. All relating import pressures, which I just mentioned, vis-a-vis our external reserves vulnerability at 8.26 months, we are very close to 6. Okay. And our vulnerability to oil vagaries. Terms of trade as of September 2022, data available, was 101.68%. What does it mean? Terms of trade means that the value of our exports compared to the value of our imports was 101.68. It means our exports were valued higher than our imports. So any point where it is greater than 100 is positive. Okay, positive for the economy, and that is quite good for Nigeria. Okay, now when you come to exchange rates, because that is what drives exchange rate majorly, because the fundamental factor is the demand supply relationship. So if the demand for foreign exchange is greater consistently and persistently than the supply, then your currency will weaken. So that is why the reference always is to how do we boost foreign exchange earnings? It's all about exports. What can we sell to the rest of the world? And I will say something about that relating to your own company and your business. Now, inflation rates. We all have had about inflation rates. In the conversation I had recently with my son, as my last born, he's an economist like me. And we're talking about inflation. And I said, is everyone aware that this noise make about inflation today? That Nigeria has had a higher rate of inflation than this historically. The highest ever we have had is 72% inflation rate. And he said, huh? When was that? So I told him 1994, 1995. So if I checked it, then I came back and said, hey, come, Daddy, what did our government do at that time to bring the rate of inflation down? I said, well, it's not rocket science. When the policy environment is right, and when you also produce a good portion of what you consume, that means, number one, you eliminate imported inflation. And I said also, number two, you are able to have some measure of control, because a lot of what we have as inflationary pressures in Nigeria are cost push. So but for us now, we know the big issue is food inflation, which is today greater than the inflation rate itself, because there are two parts to inflation rate: the core inflation and then food inflation. So core inflation means inflation on all the items that we use other than food. Food inflation is the major problem we have. And that means the way to solving that would be food availability and food affordability. So until we are able to do those two, we can solve the problem of food inflation in Nigeria. And that means inflation will remain high. All right. Now, this is a summary of the entire economy. You know, we normally say that the stock market is a leading economic indicator. And so if we therefore look at the stock market, it means that our economy, yes, the stock market in Nigeria did very well, 2020, 2021, 2022, among the best performing, you know, bosses around the world. But if you look at the end of 2022, that's up till Friday, 30th of December, 2022, the index was up for that year by 19.98%. That represents the year-to-date return, which is quite strong. And of course, the market capitalization was also up by 20.7%. But we know that a lot of things are also affecting that market. Money market rates, especially fixed income securities, whose rates have also risen in 2022. And then that has drawn domestic investors away from the stock market, whereas foreign investors are still tentative because of the pre-election uncertainties. That is, 2022 was a pre-election year. Now we have entered election year 2023. So all of this play, you know, together. But as it were, you can see the last, you know, 3 months of the year that the stock market, you know, strengthened and maintained that, you know, trending upwards for the last 2 months of the year. And the same thing is happening as at now, this new year we are in. So now, I will skip that slide. This is the slide I mentioned earlier that gives you a summary of the challenges and risks in the business environment in Nigeria. Macroeconomic concerns, high interest rates, unstable exchange rates, high inflation rates, high unemployment rates. And then we talk about poverty that I mentioned earlier. So what are the issues in there? We talk about purchasing power, talking about population growth rate, talking about unemployment rate also, talking about out-of-school children. Then insecurity is creating costly logistics. That's why a lot of things that we buy today are expensive. Also creating distribution constraints, apart from the issue of policy also that is causing troubles there. There are also constraints to investment opportunities. Then poor infrastructure is also affecting cost of doing business, and it's a disincentive to foreign direct investment inflows. Okay, talking about the future of work and technology, there's inefficient governance that is with government, and wages are uncompetitive. That's why it's so easy, you know, this so-called Japa syndrome. That is why a lot of, you know, young ones are leaving Nigeria. But again, one of my friends yesterday, a session like this we had at Lagos Chamber of Commerce and Industry said, look, he did a kind of projection and he was able to come with an inference that not more than 3% of our population will eventually emigrate. That's the average pattern all over the world anyway. But it's that in Nigeria, we hype anything happening here. So it seems like, it's a major problem, so to say, for the entire, you know, country. It's happening everywhere. And I will give you a simple illustration of that. A study carried out by Bloomberg in February 2021, they found that there are 5 countries at the top of the table when it comes to migrations. 2 of them receive, 3 of them give. The 2 that receive mostly happen to be US and Canada. The 3 that give most were Nigeria, Pakistan, and Vietnam. Okay, so, and of course, it means people migrate variously, and there are also advantages to each. Those 3 countries mentioned that give Nigeria, Pakistan, Vietnam also show up very strongly when it comes to home remittances. Okay, the challenge with us in Nigeria is that unlike Pakistan and Vietnam, when their citizens make remittances, they get back to the FX market in their country. The remittances by Nigerians don't all come back to Nigeria. A good portion of that remains offshore where they are. So whoever is to do the beneficiary here is just given the Naira equivalent. So that is why it doesn't feature much in the supply of FX in our own domestic market here. There's constrained fiscal space, no revenue base of government, unsustainable borrowing, the energy and climate change, green energy transition, of course, climate change adaptation. The major factor in the floods we experienced in Nigeria last year was climate change. And of course, there are a lot of other things also playing around. So as floods can cause problems for some people, they can also create opportunity for some others. So now, the final part of my presentation, and then we can take questions and answers thereafter. Outlook for 2023. What are the likelihoods? What are the expectations? Now, the World Bank in its Global Economic Prospect, GEP, says this about the global environment this year, that our latest forecast indicate a sharp, long-lasting slowdown, with global growth declining to 1.7% this year, from 3% that the World Bank expected just 6 months ago. That means their last projection was in June last year, okay, which they issued in July. Now, the deterioration is broad-based in virtually all regions of the world. Per capita income growth will be slower than it was during the decade before COVID-19. The setback to global prosperity will likely persist. And by the end of next year, 2024, GDP levels in emerging market and developing economies, remember, Nigeria belongs there in that particular group, that it will be about 6% below the level expected on the eve of the pandemic. Median income levels, moreover, are being eroded significantly. And what are the factors in that? Inflation is one, currency depreciation is another, then underinvestment in people and the private sector. So these are global challenges, so they are not peculiar to Nigeria. That's what I want to bring out of this as a statement issued just last week by the World Bank about the entire globe this year. Now, coming to Nigeria, they also did some projections for Nigeria, their own outlook for Nigeria. And they said the outlook for Nigeria is on the basis of 5 things. Number one, the production costs in Nigeria are rising, that the oil and gas sector in Nigeria is underperforming. Then there's insecurity in Nigeria. The floods of 2022 also will be an issue. And then there's policy uncertainty. You know, 2022 being a pre-election year, and now you also look at 2023, a new government is coming in. So before they settle down, and now you see the policy direction. Although to some extent, I don't see policy uncertainty as an issue. And this is my reason. If you look at the 3 leading contenders for the presidency, they've put out their manifestos. Every of them has a manifesto that is business friendly. So to that extent, we have a good idea. And it's in terms of what you call announcement effect in finance. The announcement effect is what they are saying they want to do. So what will that trigger? So for me, therefore, that's, I will not agree with the World Bank fully talking about policy uncertainty, but their forecast now is on 4 areas. They said oil and gas growth will be restrained this year. They also believe that growth in agriculture is softened. I don't have any problem with those 2 projections, because coming on the back of the floods of last year on the one hand, and then the insecurity that is affecting farming, I also see agri not growing strongly, as strong as we probably would expect. Then they also forecast persistent fuel and FX shortage. I disagree with them on persistent fuel shortage, because at least 3 refineries will come on stream this year. That is Dangote refinery and 2 other modular refineries. If those 3 come on stream this year and start producing for our market, I don't see any reason why there will be fuel shortages. And FX, yes, we struggle with that for the first half of this year. The second half, I don't also expect that we have FX shortages. And the reason is because what makes Naira to lose value, if you check it historically, even what is happening now, is seasonal. Seasonal in the sense that usually the demand for FX rises in the first quarter of a new year, because businesses are picking up, making orders, raw materials and inputs, and of course, paying for all manner of services, the technology world, softwares, agreements, and the rest of it. So there's a high demand for FX. Then the season when students go to school, that's September, especially those schooling abroad. Also July, August, when travel for summer. And then, of course, those are the seasons primarily. But in a pre-election year, like the one we just passed, 2022, also typically from 1998, the demand for FX also goes up. All right. But once election is over, usually also the demand for foreign currencies will subside until you get into any of those seasons mentioned. Okay. There's also the weak fiscal position that they mentioned. That we now in BA Consult said, in addition to those that the World Bank said, we should also factor in this in coming to, an outlook. The tax for road swaps that the government has already agreed with Dangote, NNPC, MTN, and a couple of other countries, will bring improvement in infrastructure. And I can give you an example here. If you talk about roads, Nigeria now has the longest stretch of concrete road in Africa, not in the West African sub-region, in Africa, longest concrete road. Okay, rail. Some 7 years ago, no rail was operating, or let me say 8 years ago. Okay, but as of today, there are 3 rail corridors in operation commercially. It's Kaduna, Abuja, Lagos, Ibadan. They worry to Itakwe. They run commercially. Aviation, as of today, what we have as terminal buildings in our international airports are a different thing completely from what they were 8 years ago. I recollect a personal experience in Port Harcourt, where the plane I boarded landed, and it was raining heavily, and all we had as terminal building was canopy, and rain beat me and beat my luggage in Port Harcourt Airport, international airport for that matter. But today they have a terminal building, okay, and so you look around like that, Kaduna, Kano, Lagos, Abuja, all of them having new terminal buildings, and joined recently, okay. Also, runways are being repaired. All of those are issues to do with, what they call physical infrastructure. But if this is the case also, it means what we beat ourselves on, that our revenue expenditure is tenuous. If you factor this in also, that ratio will be better than what we talk about today. Then what do we expect this year? Expanding domestic production capacity in 4 major areas. Refined petroleum products, as I mentioned earlier, and rice also, which is a major staple. Okay, for rice is a major staple in Nigeria, and to be commissioned shortly is the largest rice mill in Africa, and that's the one in Lagos State. All right, so that also gives you an idea of Nigeria now moving from being the largest producer of paddy rice in Africa. We overtook Egypt, by the way, 4 or 5 years ago. All right, up on the 2018, Egypt was the largest paddy rice producer in Africa. Nigeria overtook them in 2019 for a reason of policy in Nigeria and also policy in Egypt. In Egypt, they diverted water for River Nile from irrigation of rice plantations to generating power. In Nigeria, Central Bank aggressively introduced the Anchor Borrowers program to drive rice cultivation and processing. Okay, so those were the 2 major factors. So it was not just due to what we did in Nigeria that brought us there. The policy in Nigeria and the policy in Egypt. Okay, consumables, we are very strong in consumable food products and domestic items manufacturing here, and we expect that to also grow. And of course, a lot of the major international franchises that have factories in Nigeria are expanding capacity of not only their factories but big warehouses. All right, as we speak, because these are facts that we know, not that they simply told us, because we have people that are involved in constructing those warehouses and new factories. Automobiles, we produce and export automobiles to African countries. So that will also expand this year. Now, the PMI, Purchasing Managers Index, gives you a picture of business confidence. And if you go by what Stanbic has done in the last 25 months, of course, they've been doing this for close to, I think, 7 years, 7 to 8 years, 2014. They started doing this in 2014. So that's like 8 years plus now. Now, as of December 2022, the PMI had been persistently above 50. When it's above 50, it means the business condition is improving. And in fact, production is expanding. When it is below 50, the business condition is deteriorating, and therefore the economy will likely contract. So if you look at this, what it tells you, of course, FBN does the same. Central Bank used to do the same, but all of them point in the same direction, that looking forward, this economy is going to expand. And if that is the case, then it means that having an opinion different than this means we are not taking into account what purchasing managers that place orders for their businesses indicate they have seen across agriculture, manufacturing, services, construction, and retail. I don't need to talk so much about this. A friend of mine did this, and I just picked it to give you just one slide summary of this year's budget of the federal government in terms of what do they expect as total revenue, where is it coming from, what do they expect to spend, and then on what. Then, of course, if they are spending more than they are borrowing, that is deficit. How will they finance the deficit? From 5 different sources. And of course, look at the capital budget. What is the breakdown of that? So that's what this has done in just one slide. Now, the final part of my presentation, and that is what is our outlook for 2023. We project that gross domestic product of Nigeria will grow in 2023. That's positive. It will be a slight improvement over what we expect to be where we end 2022. Why do we say we end 2022 at 3.13%? It is simply because between January and September 2022, if you take the average of our GDP growth rate, it came to 2.97%. And historically, fourth quarter is when our economy usually grows fastest in the year, historically. That is, take out the period of, the pandemic and then any other year of aberration like that. Where typically it grows fastest fourth quarter. So if it grows faster than 2.97, which was the average for the first 3 quarters, that means we are likely to end at around 3%, 3.1%. And if we expect also a slight improvement over that, then it cannot be anything below 3.27%. Of course, our federal government expects a higher growth rate. World Bank expects 2.9%. So the issue for us is, instead of 2.9 that World Bank is recent goal, we expect 3.27%. And why is that so? Number one, the real challenges that we talked about earlier will come to, you might call ahead within the first half of this year. But second half, don't forget, the government will be in office. And the great likelihood is that for the frontliners, we don't expect them to take much time to put their cabinet in place. If that is the case, and from what they have put out as their manifesto, we expect them to start implementing this year. And like I said earlier on, the 3 frontliners have business-friendly manifestos. And if that is the case, then we expect that there will be concrete decisions made to address areas of challenges that will ease doing business in Nigeria. Inflation rate we expect to moderate, but it will still be double digits, but we expect it to come to 17.76% by the end of the year. By the time we did this outlook, we had not seen December 2022 data, but that data is out now. The inflation rate dropped a little from where it was in November last year to about 20%. That was from 21.9% in November down to 20.7% in December, which is good. Now, monetary policy, when we say normalization, that means the central bank will begin to take rates back to where it's supposed to be. In the advanced countries, for them, monetary policy rate was very low during the pandemic era to fight. That's what we call accommodative monetary policy, making loans very cheap. Okay, so for them, normalization was raising interest rates. But for us, we began raising interest rates just a few months ago, and we are now at 16.5%. So when we talk about normalization in Nigeria, it is in the context that there will be downward adjustment of MPR, but we expect this to be in the second half of the year. All right, and we expect that central bank might end the year at 13.5% for the MPR. Bank lending rate will remain double digits. They continue to respond to the rate of inflation, which means it will not go down any significantly because inflation rate is not expected to go down significantly as well. We expect accelerated manufacturing with improvement in infrastructure that we are seeing, and the new government coming in and intensify focus on export promotion. And that will likely bring stability to the naira exchange rate. So we believe that if there will be depreciation at all, that is on the NAFEX, which is the rate that central bank uses, we may not see us move beyond 480 this year to the dollar officially. And then roadside, we expect an improvement there. Just like I said, the pressure of dollars for prosecuting, electioneering campaigns and the rest of it will be out of the way. And then if that is out of the way, that will reduce also the demand for dollars. Okay. And if there is also focused export promotion and accelerated domestic manufacturing, then the pressure coming on demand side will also subside. Right. So ultimately, we see also intensified digitalization and ascendancy of the digital economy. Now, sectoral prospects. It's important to mention this here. I picked on 3 sectors actually to make reference to. Manufacturing is one. We expect expansion still in manufacturing. And this is because we have observed a new manufacturing along existing corridors. That is, especially between Lagos and Ogun State, and now also spilling over to Oyo State. And what I always tell people is this: if you want to confirm this, just take a trip from Lagos to Ibadan. On that expressway, you will discover on both sides there are new factories coming up on both sides of that road. Then most of them also are Chinese and Indian. So what we call new manufacturing in Nigeria is actually being driven by Chinese and Indians. But the reality is that there is capacity being built to produce more things locally here, because those foreign investors have seen the opportunity in our population number to start with, and the fact of our consumption habit. Of course, there's a shifting effort on, focus to export, not only coming from government, but even financial institutions. We know a couple of them that are putting a lot of emphasis on that. And of course, with improvement in infrastructure, we expect a moderation in the cost of the business. Then talking about energy, in terms of energy, we see that going beyond oil and gas. Crude oil production will recover. It's already in the process. When people talk about, the budget assumption of 1.6 million barrels is a fluke, I just laugh. Now, Shell brought back 500,000 barrels per day production in the last 2 months of 2022. That took our production level from where it was below 1 million barrels per day to about 1.4 to 1.5 million barrels per day. And that is quite significant. So that means we are not too far from the budget assumption of 1.6 million barrels per day. There's also intensified new investments in gas development and production. Of course, you can relate that to not only the fact that the Train 7 of LNG is also coming back on stream very strongly. And beside that, the Russia-Ukrainian war that showed clearly the vulnerability of Europe to gas supply from Russia, which makes them now to look elsewhere. That also is creating an opportunity for Nigeria. There's growing corporate and sovereign investments in green energy. Of course, if the refineries we expect to kick into operation this year, begin operation, we see a significant reduction in importation of refined petroleum products. And of course, that will also shrink the space for air subsidy. In fact, the indication by one of the major presidential contestants, that's Tinubu, is that if he wins the election and he comes into office, where subsidy will go. They've asked him several times at several town hall meetings and whatever, and he has repeatedly said that. So we know that if he comes in the office, certainly where subsidy will go. All right. Stronger consumer interest in energy efficiency. Now, each of these, ladies and gentlemen, is a pointer to where there are investment opportunities. Banking and finance. I've talked about rate normalization. I've talked about exchange value stability. Further business expansion as the economy picks up strongly in the second half. New reform initiative and license redefinition, possibly in banking. That's what we expect. The new investors, acquisitions, and new players in banking. And of course, toward the year end, we expect that some new foreign franchises will likely seek acquisitions of Nigerian banks. That's for the banking sector. Now, head notes. Why do I expect growth this year? First is that we have a large population, 6th largest in the world. Median age is 18.1 years. So it is large, it is useful, and also growing at 2.55% per annum. There's also rapid urbanization. about 52% of our population had moved to urban areas as of 2020, up from 47%, or let's say even 48% in 2015. And that's quite huge. Just think about the differential, the percentages there, multiplied by our population figure. That gives you an idea of how many millions have moved to urban areas. What does that imply for your business? But the nature of your business will determine the implication of this for you. Then deepening internet penetration, 51% January last year. And then, of course, rising. Tele-density, November last year, 114.7%. That's quite huge. Nigeria is ranked number 8 in terms of the number of global internet users. 93% of them do that on their handheld devices, especially mobile phones. So there's also strong innovation culture driven by the survivor instinct, which is what I think we apply to your organization as it does to mine. Of course, strongly evolving payments infrastructure, volume and value, that is cashless Nigeria, if you like to call it that. It will intensify, and we see more and more value now being exchanged on digital platforms. So what does that mean for you in your own business? I call it simply end-to-end digitization. This is my final slide. It's a statement created to Nelson Mandela. I said, it is the character of growth that we learn from both pleasant and unpleasant experiences, which means if your organization will grow, you better learn from what is pleasant and unpleasant now, instead of complaining about the unpleasant ones. So thank you very much, ladies and gentlemen. So I'm ready to take questions and comments at this point.
Thank you, Dr. ADEDIPE, for the rich and insightful presentation.
Thank you.
Your opening remarks struck me, and you said what we see and focus on is our choice. I don't know if it has happened to any one of us, especially when we want to change our cars. For example, we would want to buy a Toyota or a Ford, and all of a sudden, it's just the Ford cars we'll be seeing on our roads, because that's what your focus is on. So from your presentation, sir, I can see a lot of opportunities for Nigeria. So many sectors where we can actually tap into, and what even struck me again is that there are opportunities in different sectors. You mentioned the manufacturing sector, you mentioned the energy and oil and gas sector, and even the banking and finance sectors. I'd implore our youth, the younger ones, to take this as a challenge, and look for areas where they can themselves start small businesses and contribute their quota to the economy. So I'll just take a few questions for you to answer, Dr. ADEDIPE.
Okay.
Yeah, so the first question is from Toby. Will the result of the presidential election affect the investment outlook for the year?
Okay. Yes, I'm writing it down so that I can take them at home. That will save us time. Be virtual. So I'm
okay, then.
that down.
Okay, sir. Then the second question: which sector might contribute the most to the GDP this year to cause the improvements that you stated in your presentation? Then the third question is: will the election period affect the GDP contribution? Because now, between January, February, March, I'm sure the economy it's a bit slow, and I don't know if that was put into the prediction for the GDP growth for the year. I think those are the questions, sir.
All right, excellent, fantastic questions. Thank you very much. I will address them in the order that you raised them. The first is whether the result of the presidential elections will not affect, the outlook. Now, as I said earlier on, one of the things we do, not just in Nigeria, but it's a global thing. In any country where election is taking, the first thing we ask ourselves is, who are the major contenders? When we identify them, we then look at their manifestos. Okay, what are the sound bites? That is, what are they saying they will do? Which, in fact, even outside of election period, there's something I will recommend that to you to also do. Whenever we want to do a forecast of where exchange rate will go, that is from my days in banking and now as consultants to banks, is to ask a question: who are the key functionaries of the current government? And then what are those key functionaries saying? Then from among what they are saying, we then single out what we call significant utterances of key government functionaries. That's the way we describe that factor. What are the significant utterances of key government functionaries? What that gives us as a guide is policy direction. So when those key functionaries speak and they talk to key issues, okay, we pick that out as a pointer of policy direction, all right? So given that, we then say that this is the way this government will go. So in an election year, we look at for us in Nigeria, for example, the three strongest contenders for now. Yeah. Tinubu, Atiku, and Obi. All right. So now, among these three, they put out their manifestos. All right. And then we look at their manifestos and ask ourselves, are these business friendly? What they put together as ideas of what they would do? Yes, the three of them pass the test. They all have business friendly manifestos. So what we then will say is that the result of the election, because that's your question, if any of these one wins, we approach it like scenario planning. If this one wins, this is likely to be the direction it will take, and this is the implication for the economy. If this other one wins, this is the direction he or she will go. This is the implication for the economy. So that's the way it goes. So for us today, those three contenders, leading contenders, let me say, each of them portends a positive implication for the economy because of their, what they say, their manufacturers. The second question says, what do I see as the sector contribution to GDP and the, which one will have the most contribution? And my take is very simple. Agri will still be the largest contributor to our GDP. That will not change. But let me give you a clearer pointer. If you look at our economy in the last 10 to 12 years, okay, there are 6 sectors that are dominant contributors to our GDP. And that is agriculture, manufacturing, mining and quarrying. Then you have ICT, you have trade, and then you have real estate. Between those 6, in the last 12 years, they've accounted for between 77 and 82% of our GDP. And don't forget also that all that period also, we have had elections, all right? So which means that the structure of our economy, a lot of value is created in those particular sectors. So I don't see that changing because of election this year. So those sectors will still remain significant in our economy. And ladies and gentlemen, what I'm saying to you, I also apply to myself as a business person. I've been doing business in Nigeria now for 29 years. This year, 29 years. I've been in business in this economy. So I got to a point some 5 years ago and told myself, this thing I just told you about agri being the largest contributor to the economy, there's something must be wrong with me as an analyst, that my company is not doing business in the agri space. So, but today, I have clients in the agri sector in my portfolio. Okay, but until I apply this knowledge to my business, I didn't have any clients in agri space. But today I can talk about a few of them, even foreign. Okay, we've done something for the US government in agri. We are doing something for the German government in agri that will run till February next year. Okay, we've done something for an international NGO that operates in 27 African countries. There's a Kenya entity. So they're all our clients in agri space. Okay, final one. Don't I think the election will affect the GDP? Again, go back to 1998, pre-election year, 1999 election year. Take 2003, take 2002, take 2006, 2007, take 2010, 2011, 2014, 2015, 2018, 2019, 2022, 2023 will not be different. Okay, election will come and it will go. Life will continue. Okay, so and that is what I want to put before us, that we should not allow ourselves to be carried away by all the noise around the election. Historically, the economy will still run. You will still get up tomorrow and go and look for food. Me too, I will get up tomorrow and go and look for food. That's the reality. So what is more important is looking at your own business. Where are the opportunities? What can I do to take advantage of those opportunities? Thank you so very much.
Thank you, Dr. ADEDIPE. Because of our time, I'm just going to take three questions, and I'll employ you to just answer them in a minute or less, if possible. Yes.
All right, I'll try.
So, yes. Adewale Champion is thanking you for such an insightful and highly researched and forward-looking presentation. But he has a question, and he says, "Sir, the money market currently seems to be awash with liquidity. And this may persist in this Q1 due to the elections/political factors. What do you think will likely be the CBN reaction to this scenario in its next MPC meeting?" The second question I would like to take is from Troop Academy. The question goes as follows: petroleum imports are 26% of total. If Dangote refinery starts producing, why will there still be FX shortage even in July summer season? And the last question is going to be from Momo Jimo. And he says, "Thank you, Dr. ADEDIPE. Diaspora remittances is on the increase, and there is an appreciable improvement in our positive balance of trade. Why is this not impacting on our FX exchange rates?" Yes, so those are the three questions would want you to answer in less than a minute or a minute, Mark.
Okay,
thank you.
I'll do that. Now, the first one, I put myself in the position of a member of that monetary policy committee. So what will I do? Now, for them, yes, they look at liquidity, no doubt, but they look also at many other factors. So in deciding where the policy rates will be, they look beyond liquidity in the banking system. There's a difference between liquidity in the banking system and liquidity in the economy generally. So they look at that vis-a-vis economy, the state of the economy, and many other issues. So I don't expect central bank to raise MPR in the next MPC meeting. That's my personal expectation, because I also share ideas with some of the members of the committee. So if I were in that committee, that's what I tell them. If I were one of you, this is what I would do. That's what I always tell them. Second question: if we import petrol, why should we expect? We don't expect FX shortage come July. You know, if you have been following the pattern, Dangote refinery said, Dangote said, when the refinery comes to operation, they hit full production, they will be able to generate $20 billion annually for Nigeria, which is selling petroleum products to other countries. They will generate that, which also on the flip side means we will not be spending that much we spend now to import refined products. So it's a win-win for Nigeria, Dangote refinery. So every one of us should pray that it should come into operation, not because of the money to put in Aliko's pocket, okay? Final one, that's through remittances. The reason it doesn't show is simple. As I said earlier, in that study by Bloomberg, in Pakistan, when their diaspora citizens make money, they remit it back home. The dollars come back to Pakistan. In Vietnam, the dollar comes back to Vietnam. In Nigeria, it doesn't come back to Nigeria. A lot of the money remains out there. It's part of the work I did for central bank that led to the incentive they offered. That ₦5 per dollar remitted came out of the research I did for central bank. Okay, is to address this question you raised. So your question is correct. Okay, it's an issue with us in Nigeria. We like to keep dollars outside instead of bringing it in here. Okay, that's why I said these questions are fantastic. Very good audience you have here. Thank you so very much.
Thank you, Dr. ADEDIPE. I would like to take 3 more questions, then round up. The first question is from Jonas, and his question goes as follows. My question: with the Naira design, which is likely going to lead to reduction in cash printed and increased use, use of digital currency, how is this policy likely to grow the economy? And which sectors of the economy stand to benefit the most from this policy? The second question, can I go ahead? The second question is, the 2023 outlook looks promising for Nigeria. However, there are likely consequences of not getting the right or knowledgeable managers of the economy in terms of policy direction, since all these are majorly dependent on the role of government. And the last question, what should the government do to curb the Japa syndrome? What sector should they immediately focus on to register their seriousness in making a change? Thank you, sir.
All right, thank you. Well, Naira redesign for me is a good policy as announced by central bank to deal with insecurity challenges, and then also at the same time following the pattern globally that central banks do, that from time to time you redesign your currency to ensure that you narrow the space for counterfeit. But for us in Nigeria, it also aligns with the concept of cashless Nigeria. Interestingly, I served as the chairman that reviewed cashless Lagos for central bank in 2014. I was hired by the UK government, and then I served in that capacity. So there's a whole lot there, but there's no time. Okay. All I will say is that it has chances of also boosting growth on the digital platform. This is the way it goes. If you go back to basic economics, the 4 elements, MV equals PT. That means money in circulation, velocity of circulation, and there's transactions, and of course, price, which us to inflation. So what this will affect is velocity, because the more you transact in cash, the more you do on digital platforms, and the more transactions you can do in terms of speed. So that's where the benefit comes for the economy. Okay. Second question. Now, the projection, the outlook looks promising. Not just me, everybody for Nigeria sees a good picture this year. So, but this my friend said, are we considering the consequence of the economic management? I think it will likely depend on whoever wins the election and the kind of people in his economic management team, because that will be the critical thing there. All right. So none of us can beat his or her chest right now and say that definitely, things will work out as we expect. Don't forget, an outlook is just a forecast. It's not cast in stone. As conditions change, the forecast can also change. That's why World Bank and IMF will review the economy 3 times a year. Their forecast. Last question, Japa syndrome. Okay. Japa syndrome is a phenomenon that is not peculiar to Nigeria, in all honesty. It's happening everywhere in the world. Okay. Every country has it. But when you look at the history of that, not just in Nigeria, but all over the world, if you look at corporate America today, most of the leader CEOs are Indians. That is the outcome of jackpot that has happened in India in the last 30, 40 years. China is going about it a different way. China's children will go out to study and learn, they return to China to develop China. So the basic and immediate benefit is the remittances to start with. But what this also means for you and I, because that's where we close it, is that it is not something that you want government to actually act upon. It is for individual organizations. You create a pipeline so that when somebody leaves your company for a foreign country, you already have people that you can bring up to fill that position. In any case, globally for Nigeria, anyone that goes, we have so many people looking for jobs that will take the job that the person vacated. So for me, it's not something that government should begin to worry about, per se. If a friend of mine, Taiwo Yedele of PwC, said yesterday at a forum like this, where I also was the keynote speaker, and he said he had done the calculation. Not more than 3% of Nigerians will go outside of the country. 97% will still remain here. So if I go by that data, why should I worry my head about 3%? If they can earn money there and send back the money, they also learn and grow technically. So in future, their ideas will also come back to us in Nigeria to help us grow. So that's the way I see it. Thank you very much.
Thank you, Dr. ADEDIPE. Because of our time, we won't be able to take more questions.
Okay.
Thank you, Dr. ADEDIPE. On behalf of Apel and the audience, we would like to thank you for such an insightful presentation. Hopefully, we would all go back to our respective offices and make informed and strategic decisions based on what we have heard today. Once again, we would like to briefly tell you what we do at Apel. Apel is a one-stop integrated financial services organization that runs under 5 licenses. We would implore you all to check our online trading platform, Apel Alpha, and you can reach us on the following social media platforms: our website, www.apel.com.ng, our email, customercare@apel.ng, our Instagram @ApelNG, and our LinkedIn page @ApelNG. Thank you all for joining our session today, and it's bye for now. Yes, the links and the video recordings will be shared to every one of you. Thank you very much to all the participants. Thank you. You can drop in your email address